Hey traders, Nick Shaheen here, looking at Royal Caribbean again. I did a video on the 18th, and because the masses asked for it, like hordes, no, actually just one guy asked for an update. I will do another video because it actually played out. So they asked for an update. So I think they shorted, I don't know if based on the video or at the time of the video, and now is it time to get long. So what is today, the 23rd? Bad day in the small caps, okay day in the Nasdaq. It held green most of the day. Bad day in the S&P, but nothing out of the out of the ordinary. It just felt weird. So the macro, let's tackle that first. Nothing changed. Money is all over the economy. Artificial from the Fed, artificial from the stimulus, but it's there. It's in the pockets of people. Short story about that is that the last couple of days, my son is 19. He sold his pickup, an old it was an old Silverado with 340,000 miles, and somebody paid 8,500 for it. That's a lot of money. And here's the kicker. That's the portion of the story that actually raised eyebrows in my case. The kid that bought it was counting out the money, and he was having a hard time counting 50s. And he said, I couldn't get hundreds because the bank was out of hundreds because of the stimulus. Just making a point here that there's a lot of money in people's pockets. So if left alone, stocks will rally. What do I mean by if left alone? The media is covering 3 appearances by Jay Powell this week to tell us what? Nothing that he hasn't already acted on. The Fed met, they decided, they told us what they decided, and he keeps coming back on TV, and they hammer him with the same freaking questions, expecting a different answer. It's like he gave them what they wanted, which is rates low for 2 years, 3 years, and now they keep saying, why don't you want to raise rates? So which is it? They have runaway yields, and then they say, now that the yields have abated a little bit, the TLT is breaking out, which means the yields are falling. That doesn't help either. So the whoever is in charge of the media meme has decided that they want to put down some negativity into the market. Price will win. You put the S&P versus the VIX, the S&P wins all the time. So you have stents of badness, and luckily we have charts. So this is what we said last time in the chart. It was here. I said I wouldn't do anything until I get clues. I said I would either buy the dip or chase the rip. So it was a do nothing or buy the dip. And I said somewhere around 85, preferably lower to like 82. And that's where it kind of fell into. So this was the actual, whoops, I should move it. The actual screenshot that I took from playing the video just 5 minutes ago from last time. So we are here somewhere, right? So now what do we do? Here are the lines. This is a daily chart, nothing fancy. The 18th was here somewhere, and then it fell out of bed. So it's almost a full-blown correction, which Wall Street says 10%. But more importantly is I like to see what happened last time they were here. So just from a trend level, there should be buyers from here on down. This was where the world stopped on March 5th. You know, when the Nasdaq fell out of bed and stocks like Tesla were down 25% from the highs, and so actually more. And so that was a legitimate test. That lies underneath. There was also this stent that was a burst that failed miserably, and this was too fast. They should have struggled here a little bit. But they came back and tested it, and here they are testing it again. My assumption is that if the markets just meander for the next few weeks, this will be fine. So if I was thinking of buying or getting long Royal Caribbean anytime in the last 2 weeks, this is an entry point. Is it a load up, full blown, all in? No. This is reverting to the mean. It just reverted to the mean. This red blue is just a mathematical regression representation that the chart platform does. This is TradingView, by the way. So it just draws itself to give me, like, it's not an actionable thing. It just gives me a visual sanity check that, okay, we overshot. Somewhere in the middle lies the truth. Can they overshoot again? They can. But I'd be a buyer into that March 5th candle rather than a seller. I'd be definitely a buyer into anywhere under 80 for a swing trade up. So when I don't have a lot of references up here, it means that I should zoom out to see perspective. I said that in a prior video. And here's the exciting perspective. If I can, I would expect buyers on this ascending trend. You see what I was trying, what knife am I trying to catch? Somewhere here there should be buyers, right? This keeps this alive. And then let time pass to attack these big tails. This is a week. Each candle is a week. So for the whole week they tried, they failed. For the whole week they tried, they failed. Same. And now, they're going to do the opposite down here. So if they come back and tackle this and break through, this thing will go to 140, but not in a straight shot because this is a lot of overhang here. So, but technically, they've overcome a giant hurdle. They'll fill this gap, and they'll jump above it and hopefully retest the 100 for footing, and then it's off to the races. This is assuming that there's no new shoe to drop in, like the pandemic doesn't kick into overtime again, where they need to relock the U.S. Like so far right now, the U.S. is the only one that is not sending out bad vibes, like France is, for example, from the lockdown again. The inoculation process is going well here, and it looks like we're going to be able to put this thing behind us and move on and start trading some fundamentals without this overhang of COVID. Lockdown or no lockdown. I live in California and I can finally get a haircut. So I don't want to go back to not being able to get a haircut. So this goes along the same logic. If left alone, they can cruise again. In fact, I just saw a commercial for Disney Cruises, which I haven't seen in over a year. And hopefully that whole industry can come back. Until then, the fundamentals don't make sense. Like for me to go look at what do the financials look like? They're in terrible shape compared to what they used to be because they can't sell anything. Well, they could probably sell bookings, but I don't think they can go on the water. So it's a long slog back. Technically, this a wall. Technically, there should be buyers attacking the wall. If they breach the wall, they can overshoot higher. In a straight shot, I hope not, because these straight shots don't do anyone any favors. Look, you take a straight shot and then it takes you weeks to build it back up. Why not ease into it, little bursts, instead of these massive moves that make no sense whatsoever? You can thank the Wall Street bets, is it? Wall Street bets for this kind of thing, maybe, I don't know. But it's better to break out in a sensible manner so that you don't give it back up and it takes you weeks to rebuild it back. But the lines are clear. The buyers know what they're stepping in and they know where they're going to fail, and they will keep tackling that failing point until they overcome it. I don't have a position, so this is an honest opinion and a follow-up on one that I did not too long ago. Hopefully that helps some people out there.